For decades, a teenager's first job meant mowing lawns, babysitting, or washing cars in the neighborhood. Today, that local hustle has moved online. This chart compares the hourly pay of traditional teen jobs against specialized freelance work. A typical neighborhood gig or retail job pays around $12 to $15 an hour. But if you have digital skills, you can command $20 to $40 an hour. Earning at this level allows teenagers to fund their own major expenses while building a professional portfolio years before their first day of college. We're looking at roles like tutoring younger students in Python, editing YouTube videos, or creating graphic design assets for small businesses. However, moving into the digital workforce shifts a minor's status from a local helper to a professional contractor, introducing Entering the remote workforce effectively subjects minors to adult-level contract compliance and liabilities they are often completely unprepared to manage. Many teens try to sidestep those complexities by looking for low-effort tasks. You've probably seen the ads for taking online surveys, watching videos, or testing basic apps. These platforms let you bypass interviews and resumes entirely, but the return on your time is exceptionally low, often translating to actual pennies per hour. Worse, you are trading away vast amounts of personal demographic data to data brokers to earn those few cents. Whether you pursue high-end freelancing or standard neighborhood gigs, you will eventually hit two unavoidable roadblocks. Here is a decision tree showing the reality of teen employment. Every path splits into two major hurdles: legal age gates and the IRS. You cannot fully optimize your earning potential until you legally clear a platform's age restrictions and navigate the government's strict tax thresholds. Let's look at the standard path, the W-2 employee. For a teenager under 16, this usually means bagging groceries, working a cash register, or serving food. These jobs are heavily regulated. In the US, the Fair Labor Standards Act, and in the UK, local council permits, dictate exactly what a minor can and cannot do. This matrix compares the W-2 route with independent 1099 freelance work. Under the W-2 column, notice the strict hour limits. During the school year, 14 or 15-year-olds can legally work a maximum 3 hours on school days and 18 hours a week. Now look at the 1099 column. Freelancing offers high flexibility and earning potential, but comes with a massive spike in personal liability. W-2 jobs are legally safe. Your employer handles the compliance. But those strict government hour caps mean your overall earning potential is permanently throttled. Plus, retail and food service require rigid shift scheduling. If you have a heavy academic load, sports, or extracurriculars, finding shifts that fit your life becomes a constant source of friction. The W-2 route forces a direct trade. You give up high earning potential and schedule flexibility in exchange for strict legal protection and a guaranteed minimum wage. So what about the 1099 freelance route? Opening an Etsy shop, selling graphic design on Fiverr, or offering coding help online. You get total control over your schedule, but you immediately run into a hard barrier built directly into the platforms. Digital marketplaces legally mandate that users must be 18 or older to own an account and process payments. You cannot simply sign up and start collecting cash. The only legitimate workaround is that a parent must open the account in their name, co-sign the agreements, and connect their own bank information. Entering the digital economy as a minor requires transferring all legal and tax liability directly onto your parents. Then there is the highly visible aspirational sector of teen employment, content creation, like streaming on Twitch or influencing on YouTube. The appeal is obvious. You get access to variable, potentially lucrative ad revenue and brand sponsorships doing something you already enjoy. But the moment you start earning, you trigger intense legal friction designed entirely to protect young entertainers from financial exploitation. Depending on where you live, you might need a local performance license or a specialized trust, like a Coogan account in states like California, which legally locks a percentage of those earnings away for your future. Being an influencer looks like an unregulated free-for-all from the outside. In reality, generating revenue automatically triggers strict legal mandates designed to regulate child labor. That brings us to a major point of confusion in youth employment, the assumption that minors do not have to pay taxes. The IRS taxes income, not age. If you work a traditional job and earn under the standard deduction, you can claim exempt on your W-4 form. But claiming exempt only stops federal income tax. Your employer will still unavoidably deduct FICA taxes, meaning Social Security and Medicare, from every single paycheck. And if you choose the digital gig economy, you step into a massive hidden trap, the self-employment tax. Look at this diagram. If your net earnings stay under $400, no filing is required. But cross that line, and you are hit with a 15.3% tax rate. Whether you're doing online tutoring, walking dogs, or selling digital art commissions, the rule is identical. Earning over $400 triggers a mandatory IRS filing. Failing to track your gig income creates a severe legal vulnerability. You owe the government 15.3% the moment your freelance income clears $400. To navigate these legal and tax hurdles, you need a strategy based entirely on your specific age bracket. If you are 13 to 15 years old, your best option is local, low-liability physical work, like yard care, or sticking to highly secure platforms where a parent explicitly manages the account. At this age, you should avoid complex digital freelancing entirely, unless your parent is willing to fully operate and assume responsibility for the business entity. If you are 16 to 18, leaning into specialized digital freelancing or curated online tutoring platforms becomes the optimal path for maximizing your hourly rate. But at this bracket, you have to meticulously track every dollar. You must reserve at least 15% of your earnings for taxes, and only use established platforms that offer clear payment protection, so you actually get paid for your work. Regardless of age, safe digital employment requires a strict protocol. You have to verify the platform's age requirements, track all 1099 income over $400, and secure parental consent for your accounts. Remember, choosing to sell high-demand digital skills means you must put in the difficult unpaid hours up front to actually master the craft before you ever see a single dollar. The ultimate trade-off in teen employment is straightforward. Higher pay and schedule flexibility demand adult-level discipline in tracking laws, filing taxes, and developing your personal skills.